For MACRS depreciation purposes, which recovery period should the taxpayer use when filing his income tax return for the second year? On March 15th, year 2, the taxpayer purchased and placed in service an apartment building. So, this is a real property containing 6 units, and this is residential. This is not a warehouse, factory, or something. So, I know that the depreciation would be 27.5. I don't even need to read the other things. It's a real property which is not residential. They're asking me the rate. I'll just simply go and choose 27.5 years. Now, this is that special provision of ADS. See, what is the first year's depreciation under the MACRS rules using the following table? The taxpayer bought a truck weighing 8,000 lb, so you have to use the ADS system. She uses the truck to make deliveries in her candy business. She bought the truck on July 1, year 2 at a cost of $25,000. What is the first year's depreciation under the MACRS rule using the following table? So when you see the MACRS rule, you will see if it's a first time truck, you get a maximum deduction of $12,400 in the first year when you're putting it for recovery. So what you will take? You will take, okay, I think they have one sec. I think, they've not given you the table here, which is very strange because I don't think, yeah. So actually, they're asking you the life of the asset and they are not concentrating on ADS, they're only concentrating on the MACRS rules. So in this question, since it's a truck, which is an automobile, it is depreciated over, actually, this is ADS, They have used the ADS 5-year recovery period for a cars, light trucks, etc. So in this case, okay, I think I should have removed this from your, I don't want you to get into so much of detailing. So basically what they're saying is a 5-year property. What is the first year's depreciation? The first year's depreciation is going to be at the rate of, one second. Yes, here, one second. Okay, so see, this is what they're trying to say. It's car and trucks. Trucks would be in this category. You've got a $25,000 worth of truck. It has to be depreciated at 5 years using 200% declining balance method. So my straight line rate would have been how much? The straight line rate, if I look at this question alone, see, my straight line rate would have been 1 by 5, isn't it? 20%. My straight line rate would have been 20%. And my WDV rate would have been double of this, that is 40%. Now, I've depreciated for 5 years, right? And I'm
Yes.
going to use double the
Like,
straight line. So 1 by 5 becomes 20%. You're using double of that, that becomes 40%. It's a double declining balance method. But if I'm using the ADS property, which is applicable for listed trucks, which is more than 6,000 lbs, I'm going to use straight line method, right? So I'm going to depreciate it only using 5 years and that too straight line method. Have you understood? So in this example, since it's an ADS property, since it is more than 6,000 lbs, it's an ADS property, you can depreciate it at 25,000 for 5 years, completely using straight line method of depreciation. So the amount of depreciation becomes $5,000, 20% basically. Is this clear? So either 20% or 1 by 5, whatever it is. But it is too much of information because you have to understand that it's a truck. That truck would be in the category where you get a 5-year property, 200% declining. This is, again, these are not simple questions. These are very irritating questions. But you have to understand that this is the exception. This is the minority question, okay? How much of his purchase is considered listed property for depreciation purposes? So the call of the question is, what is listed property? Okay. So call of the question is, what is listed property? So in this case, I've got a pickup truck which is more than 6,000. I know this is listed property. I know video camera is a listed property, not desks, not chairs. So the answer becomes $15,450. This is just to help you understand what is listed property. Now look at this question. Estella works as a computer programmer for a marketing firm. She performs 40% of her computer programming on a home computer during the weekend as the company is closed on the weekends. So she can take off 2 days during regular work week. So there's a lady who is employed by a company. She needs a laptop to work. And she doesn't want to work on the weekdays, any 2 days. So she's working on the weekend and she is taking off on the 2 work days. The home computer that the taxpayer works on is identical to the computer she uses at work, and she uses it exclusively for a job related work. So I've bought a computer for my home purposes. Why? Because I want to do my office work at home. The employer does not require Estella to take work home with her on the weekends. It is the taxpayer's choice. So the company is not requiring you to do that. Since you want to do it, you're free to do it, but then you get no tax deduction. Because she uses the home computer exclusively for business purposes, obviously the employer is not going to reimburse you for the cost of the laptop. Can you take any amount of depreciation deduction on the computer? The answer is no. It is not something which is used partly for business, partly for home. It is used 100% for business, but it is discretionary. I didn't ask you to do it. You're doing it and your will. You suffer the pain. As a tax specialist, I'm not going to allow you to claim this deduction.